Oh, thank you for watching this video. This video, I'm going to talk about how to record equipment purchase with a loan. So it could be with a down payment or without down payment. And I'm going to cover all the entries you'll need to make. Okay, so to record the purchase of equipment uh, with a loan, with or without a down payment in the accounting system, whatever accounting system you have, and you need to follow these steps. Okay, so the first one is setting up your chart of account. You got to have chart of accounts set up in your books. So first one is checking account. So you may already have a checking account. So if you're using that account, that's fine. If you for the down payment, and then you need to have a fixed asset equipment account. This happens to be the parent account, and underneath you have original cost for that equipment and the depreciation, cumulative depreciation for that equipment. So you need one parent account and then two sub accounts. And then the difference between original cost and accumulative depreciation is your net fixed asset amount. Okay, and then under the long-term liability, because someone is financing this loan, so this long-term liability is over 12 months. Uh, so in this case, you have a parent account, and underneath you have a XYZ name of loan company. This is your sub account, and then you have a depreciation expense account. Every month you have to depreciate the value of your equipment, every month, and then the interest you're paying on this loan, and then at the end, it's I'm just giving you what you do need to do if you have a gain on sale of this fixed asset, or loss on this fixed asset. Okay, so I'm just going to go to entries now. Now, this is the fun part. Okay, so this is debit and credit side. Okay, so the first one is the equipment. It says furniture, but it's not furniture. It's the equipment. In your case, it would be equipment. So you bought it for $100,000. It's setting up a fixed asset for $100,000. And then other side is you have a loan for $100,000 and you're not making any down payment for this transaction. Okay, so this is the debit, your fixed asset equipment account, and credit your long-term XYZ loan company sub account. Okay, and this is the equipment, the original cost account. This is also sub account. And then it's also a good idea if you want to attach your receipt, your invoice, your $100,000 supplier's invoice, and the also use some loan document, and that everything in one place. Okay, and the next one is this. It's the same. In this case, it's basically you making $10,000 down payment, so the loan amount is $90,000. The money is coming out from your bank account. That's the only difference. The $100,000 still the same. That's the purchase amount of equipment. And same thing, you attach those two receipts. Okay, so this is the recording the original transaction. Now I'm going to go to next monthly transaction you may have. Okay, so loan company will send you a bill. The bill will say, hey, you owe me, in this case, $3,400 monthly payment. You need to make $3,400 monthly payment, and the pay stop payment invoice stop probably will show you the split. How much is the principal portion, how much is the interest portion. So in this case, $2,800 is the principal portion of this $100,000 loan, and then $600 is interest portion, interest paid for that month. So altogether, $3,400. So debit your loan account, reducing your loan balance, and $600 is your expense to your P&L, and you're taking out money from your bank account. So bank balance is going down here. Okay, and the next one is the internal, the depreciation expense, and so it's $2,800 each month. It is a fixed one, basically $100,000 divided by X months. In this case, let's say 36 months. Yours could be different, So this is the fixed amount, and you can set up recording transaction type. That way you don't have to do this entry every month. Uh, so every month this will show up in your P&L, $2,800 as your depreciation expense, and the other side is the cumulative depreciation. It will show as your contra account, cumulative depreciation account. It'll be negative on your fixed asset uh, uh, fixed asset amount. Okay, so now the next one is the okay. So now it's possible you need to sell this fixed asset, at some point. I'm just showing you an example what you need to do if you have a gain or loss on sale of the fixed asset. Okay, in this case, it's a $10,000 gain, and just looking at your books, you bought $100,000, so you need to take that one out from your books, remove it from your fixed asset account, and you need to check to see how much is cumulative depreciation you have at that point. In this case, uh, $50,000, right? And so $50,000 it comes out from cumulative depreciation, and then you have Chase checking. They see the bank deposit again it, and then your difference is 60 minus. Then the difference is $10,000. That's your gain on that side, and so uh, if you have balance left on the loan, of course you have to make that payment, but that won't affect your gain or loss portion. It will just be, transaction for making that loan payment. Okay, so now so if you need to make a loan payment, finalize, it'll be same thing. You just figure out how much balance left, and you just make the payment. Okay, and then the next one is the A. Sometimes you lose, sometimes you gain on fixed assets. So basically, this one is a $10,000 loss. So that's your debit to your P&L. The other one, gain, is a credit to a P&L account. And you see $40,000, 10,000 minus 50, you have a balance of $50,000 on your book, and you just got 40,000. That means you lost $10,000 on this book, on this sale. Okay, so that's the and same thing. If you have balance left on your fixed asset on your loan, then you have to write a separate check to your loan company. And when you do it, it basically money coming out, so that's a credit to your bank account, and then you make the other side is the debit, is your clearing your balance on your loan account. Okay, so if you have, hope this video is helpful to you. Leave a comment if you have any questions. Be sure to subscribe to our YouTube channels. Thank you again. Bye.